in partnership with CommSec.
Joining us from CommSec now is Tom Piotrowski. Good morning to you, Tom. We had on Wall Street overnight, the tech stocks didn't do too well. Is that going to drag on our market at the open today?
Oh, Kenny, not at this stage. The futures are predicting that the ASX 200 will be ahead a little under 1/4%. So that's a nice addition to yesterday's gain of 1/3%. So part of the reason why tech stocks were underperforming in the US was that we have got a raft of earnings numbers out of the tech sector from marquee names over the course of the next couple of days. So included in that group, Amazon, Apple, Meta, and Microsoft. So that was one aspect of things. Nvidia shares were down by more than 2%. There are reports that Huawei is about to test a high-speed AI chip, which will directly compete with some of Nvidia's high-end products, and that testing will be imminent, and there could potentially be samples of that version shipped in a matter of weeks. So that just put the frighteners on Nvidia a little bit. And in terms of the overall performance of US stocks last night, we saw them with some gains in early trade. That was erased, and you saw a decent loss at one stage. The S&P 500 down by about 1%. That loss was recovered with the index just in positive territory by the close. So that reflects the skittishness ahead, not only of the earnings numbers, but there'll also be some really important economic reports. There'll be a snapshot of how the US economy performed in the last quarter. There will also be key inflation numbers that the US Central Bank looks at. And then the week will be bookended with key jobs numbers. So ahead of that, investors were just sort of wondering whether or not there's value in chancing their arm, and that volatility that you saw intraday reflected that. Elsewhere, worth talking about the moderation that we saw in the US dollar, which would normally be supportive for commodities, but not last night, Kenny. Oil prices in particular fell by as much as 3% at one stage. They were down by 1.5% at the close of trade. There's a prospect of increased supply from OPEC and allied producers, and then in the broader picture, investors still remain concerned about growth prospects in the near to medium term. So that's why oil was under pressure. The Aussie dollar has gained some ground thanks to that softening greenback. So we're trading back to around 64.3 US cents at the moment.
Yeah, plenty going on this week. Tom, thank you. Chat to you soon.